Bismillahir Rahmanir Rahim. This side Dadiallah Haidari. In this video, we are going to discuss about the units of production method. We said for calculation of depreciation, there are three methods. The first one is a straight line method. Second one is units of production. And the last one is double declining method or double declining balance. Students, if you remember, while we were talking about the depreciation, we said depreciation is decrease in the value of tangible assets. Decrease in the value of tangible assets. And for calculation of depreciation, we must know, we have to consider the three components or three elements. The first one is the asset cost, the total amount of money which is paid for acquiring of an asset. That is called as acquisition cost, or that is called as the total cost of the asset as well. The second thing is estimated residual value, or estimated salvage value, or estimated scrap value. It means how much the value of the asset will be after the expected useful life of it. And the last thing that we have to know it, that is the estimated useful life of the asset. It means for how long the asset will be used in the business, or the length of services which an asset can provide, or which an asset can give to the organization or to the business. That is called as the estimated useful life of the asset. We said for the measurement of the estimated useful life of the asset, there are different methods, or there are different standards for measuring of it, which the first one is it can be on the basis of the periods. It can be on the basis of the years, which we have discussed about it in the straight line method of depreciation. But the second measurement for it is, it can be on the basis of the total units of output. Suppose you have purchased a machinery, and that machinery has the capacity to produce 1 million products. Now this 1 million product, either it's going to be produced in 1 year, it's going to be produced in 2 years, it's going to be produced in 3 years and 5 years. And as many years it's going to produce, so it doesn't matter. But our main focus is on it, that this machine is going to produce 1 million product. This machine is going to produce 1 million product, or 1 million is the capacity for it. So for that, we are using the units of production method. So in this video, we are going to have discussion about the concept of units of production method, how to calculate depreciation expenses with the units of production method, what is the formula for calculation of it, and at the same time, we will learn how to prepare the schedule or chart or table of depreciation with the units of production method. So let's discuss about the concept of units of production. If you remember, while we were talking about the straight line method, we said the straight line method formula is that asset cost minus estimated useful life, estimated salvage value divided by estimated useful life of the asset. And in the straight line method, the estimated useful life of the asset was on the basis of the number of years, or it was on the basis of the periods. But in the depreciation calculation with the units of production method, that estimated useful life of the asset is based on the total units of production, or it is based on the total output, or it is based on the total output or total units of production. So basically, this is the main difference which we have it between the straight line and units of production method. So in the units of production method, first of all, we are going to calculate the depreciation per unit. What does it mean? Suppose you have purchased a machinery, and that machinery has the capacity to produce, suppose 100,000 products. 100,000 products is the capacity of that machinery to produce. So how much the value of that asset will decrease while producing of 1 unit? While producing of 1 unit, how much the value of the asset will decrease? So first of all, we will calculate it, which that is called as depreciation per unit. And after that, we are going to multiply depreciation per unit by the number of units which were produced on that period. It means if on that year, like if in the current year, out of 100,000 products, if 5,000 product is produced, so the depreciation per unit will be multiplied by the units which are produced in the current year or in the specific year. So for that, inshallah, the concept of it would be clear to you with the help of the formula which we have for the units of production method. For calculation of the units of production method, there are two formulas, which the first formula we have to calculate depreciation per unit, and there is another formula that is we will calculate the depreciation expenses. It means directly we cannot calculate the depreciation expenses as we are calculating it with the straight line method. So the formula which we have for calculation is that depreciation per unit is equal to asset cost. What is asset cost? All of you know about it, that the total amount of money which is paid for acquiring of the asset, that is called as asset cost, or that's called as acquisition cost, or that is called the total cost as well, minus estimated salvage value. Students, with the red color you can see that estimation. You have to keep it in your mind that when you are talking about the estimation, it is based on the expectation and it is based on the probabilities. There is chances for it, like maybe it will be or maybe it will not be. It is just based on the estimation. Exactly, we cannot say it. Salvage value means that how much the value of the asset will be after the expected total units of production. Since we are using the units of production, it means how much the value of the asset will be after expected total units of production. That's called as salvage value. Salvage value is called scrap value, and this is called as the residual value as well. Suppose you have purchased a machine and that machine is expected to produce 10,000 products and the cost of that machine is 10,000 USD. So after producing of 10,000 products, how much the value of the asset will be? That is called as the salvage value, or that is called as a scrap value or residual value. And in the denominator we have asset cost minus estimated salvage value divided by estimated total units of production. Units of production, that is also based on the expectation and that's also based on the estimation. Exactly, we cannot say that exactly the same numbers will be produced by the machine. Suppose you have purchased a machine with the cost of 10,000 USD and it's expected that machine will produce 10,000 products as well. 10,000 USD you have purchased it and expected that machine will produce 10,000 products as well. Now there is chances that machine will produce more than 10,000 products, and there is chances that machine will produce less than that 10,000 products as well. That's why we say that estimated salvage value and estimated total units of production is based on the estimation, and that is based on the expectation. So students, from this formula we are getting the depreciation per unit. It means how much the value of the asset will decrease while producing of 1 unit of the product. And after calculation of the depreciation per unit, we are moving to the depreciation expenses. As we said before, that directly we cannot calculate the depreciation expenses. So the formula which we have for the depreciation expenses, that's equal to depreciation per unit. Depreciation per unit, we take it from here. Depreciation per unit we have calculated from here, which depreciation per unit is equal to asset cost minus estimated salvage value, asset cost minus estimated salvage value divided by estimated total units of production. So from this formula we will get depreciation per unit, and after that when we multiply depreciation per unit by the total number of units which are produced on that period. It means, like, if our expectation is the machine will produce 1 million products. So in the current year, suppose the machine has produced 10,000 products, so we will multiply the depreciation per unit by the 10,000, which will get the depreciation expenses. So these are the two formulas which we have it for the calculation of depreciation with the units of production method. I hope the concept of units of production method is clear to all of you, and I hope the concept of the formula is also clear to all of you, and I hope that you can solve question with the help of this formula. So in the next slide we are going to have we are going to explain the units of production with the help of numerical example. So now let's explain the units of production method with the help of a numerical example. Students, in this example, on 1st January, we purchased equipment for 50,000 cash. Equipment is purchased for 50,000 cash. What is 50,000? 50,000 is called the total asset, or that is called as the asset cost, or that is called as acquisition cost as well. Do not forget that asset cost or acquisition cost is equal to 50,000. The equipment is expected to produce 100,000 units during its life. This 100,000 units, this is the total estimated number of products which the equipment will produce. This is the total number of units which is expected the equipment will produce. And the estimated and has an estimated salvage value of 5,000. It means after production of 100,000 units, the value of the equipment will be 5,000 USD. The value of the equipment will be 5,000 USD, which this 5,000 is called the disposal, or this is called residual value, and this is called as scrap value as well. Now, the second part of the question says that if 30,000 were produced in this year, it means in the current year, the total number of units which are produced, that's equal to 30,000. What is the amount of depreciation expenses? So we have to calculate the depreciation expenses from this question. Students, we said in this example, the total asset cost is equal to 50,000 USD. The total asset cost is equal to 50,000 USD. Estimated salvage value is equal to 5,000. Estimated salvage value is equal to 5,000. It means that the value of the asset after production of 100,000 will be 5,000 USD. And the estimated total units of production is equal to 100,000 units. It means this is the expectation, or this number of units will be produced by the asset or by this equipment. So the formula which we have for calculation of depreciation expenses, as we said, there are two formulas that we are going to use it. The first one is depreciation per unit, and the second one is depreciation expenses. It means directly we cannot calculate the depreciation expenses. First of all, we have to calculate the depreciation per unit, and after that we can calculate the depreciation expenses. So first of all, let's calculate the depreciation per unit. What does it mean? It means how much the value of the asset will decrease after producing of each unit of production. After producing of each unit of production, how much the value of the asset will decrease. So students, the formula which we have for calculation of depreciation per unit is, you can see it here, that's equal to asset cost. How much is asset cost? That we have it in the example. Asset cost is equal to 50,000. So here I will write it as 50,000. 50,000 USD is the asset cost, minus estimated salvage value. Estimated salvage value, it means that how much will be the scrap value or how much will be the disposal. That's also given in the question, which the salvage value or disposal is. Disposal will be 5,000. So minus 5,000, which that's the scrap value or that is salvage value, divided by estimated total units of production. Estimated total units of production. Divided by estimated total units of production, which the total units of production is also given in the question. We have estimated total units of production, which that's equal to 100,000. The total units of production is equal to 100,000. So students, 50,000, that is the asset cost, 5,000 is the salvage value, and 100,000, that is the estimated total units of production. Now this is equal to 50,000 minus 5,000. 50,000 minus 5,000, which that's equal to 45,000. That's equal to 45,000 divided by that 100,000. Divided by 100,000. Students, this 45,000, if you remember, this is called as this is called as depreciable base, or this is called as depreciation cost as well. It means depreciation is calculated on the basis of the 45,000. Depreciation is calculated on the basis of the 45,000. It means the value of the asset will be decreased by 45,000. Why not by this 5,000? Because this is the fixed amount. Even after production of this 100,000, the value of the asset will be 5,000. So the value of it will not decrease. So students, 45,000 divided by 100,000, that's equal to how much? That's equal to 0.45. 0.45 means this is the depreciation per unit. It means the value of the asset will decrease by 0.45 or 0.45 after production of each of these units. While producing of one unit of this 100,000, the value of the equipment will decrease by 0.45 or 0.45. So students, this is the depreciation per unit which we have calculated. After calculation of depreciation per unit, we are going to calculate the depreciation expenses. So the formula which we have for calculation of depreciation expenses is that depreciation expenses is equal to depreciation per unit. This is equal to depreciation per unit. How much is depreciation per unit? That's already we have calculated, and that's equal to 0.45. That's equal to 0.45 multiply by number of units produced in this period. Number of units produced in this period. Later on we will have discussion about this. So let's see that in the first period how many units are produced. And this year the total number of 30,000 units are produced. So the total units are 30,000. So here I will write it as 30,000 multiplied by 30,000. So students, from this formula we will get the depreciation expenses. Means 0.45 multiplied by 30,000, that's equal to 13,500. It means the value of the asset will decrease by 13,500 USD while producing of 30,000 of the units. While producing of 30,000 of units. So students, this is the method for calculation of the depreciation expenses with the units of production method. I hope the concept is clear to all of you. So the second part is that we are going to discuss about the depreciation chart or depreciation schedule, that how we can prepare the depreciation chart or depreciation schedule with the units of production method. So for that, we must have the units which are produced in the different period, which fortunately in the question, the different units which are produced, it's given. So these are the different units which are produced in the different period of time. This is the first column is column for years, and second one is the total units which are produced. In the first year, the total of 30,000 is produced. In the second year, the total of 20,000 is produced. In the third year, 40,000 is produced, and in the fourth year 10,000 is produced. So these are the total units which are produced in the different period of time. And students, we said that the total units which are produced, that's equal to 100,000. If we add all of them, so it should be equal to the estimated total units of production, which that's equal to 100,000. Now let's go and prepare the depreciation chart or depreciation table with the units of production method. Students, for the preparation of the depreciation chart or depreciation schedule, you have to draw 4 columns: column 1, column 2, column 3, 4, 5, and 6. 6 columns required for preparation of depreciation chart or depreciation schedule. First of all, on top of it, we have to write the name of the we have to write it, that what it is. Obviously, this is depreciation chart or depreciation schedule. That on top of it, I have to write it. And in the first column, we have the column for years, as same with other methods of depreciation. And students, these years should be in the chronological order, and years are periods, as you all know about it. Year 1, year 2, year 3, or as many years we have. And the second column is the column for units produced. It means the total units which are produced in the different period of time. We have to write it here. It means how many units produced in the first year, second year, third year, and so on. Next column is the column for depreciation per unit. Depreciation per unit means that how much the value of the asset has decreased while producing of 1 unit of the product, or while one output, or while one production. The next column is the column for depreciation expenses. As you all know about it, the depreciation expenses that already we have discussed about it, that how we are going to calculate it. Depreciation expenses equal to units produced multiplied by depreciation per unit, which we had discussion about it. Next one is accumulated depreciation. Accumulated depreciation, which that is called as the summation of depreciation as well, or that is called as the total depreciation expenses as well. And the last one is the column for the book value, or this is called as the value of the asset as well. How much is the remaining value of the asset in the first year, in the second year, in the third year, and so on. So students, this is the chart that we have prepared for it. So let's fill the chart whatever we are having. In the first year, in the column of years, we have to write the different period, and these different periods are given here. We have 4 periods: year 1, year 2, year 3, and year 4. So let me write it as here: first year, second year, third year, and fourth year. So these are the different periods of time. And units produced, this is also given here. We have it, all of the units which are produced, and we said it should be given in the question. Units produced, it should be given in the question. So in the first year, the total of 30,000 units are produced in the first year, and in the second year, the total of 20,000 units are produced. In the second year, 20,000 units are produced. In the third year, 40,000 units are produced. So we'll write it as 40,000 units are produced. And in the fourth year, the total of 10,000 units are produced. In the fourth year, the total of 10,000 units are produced. So students, this is the total number of units which are produced in the different period of time. And most of the time, students are getting confused that from where we have got it. This is given in the question. These informations are provided in the question. You can see it here, right? These are the different units which are produced in the different period of time. Now, students, the third column is column for depreciation per unit. It means how much the value of the asset has decreased while producing of 1 unit. How much has decreased? So for this already we have solved, we have calculated depreciation per unit. So depreciation per unit we have calculated from this formula, that asset cost minus estimated salvage value divided by estimated total units of production, which that's equal to 0.45. That's equal to 0.45. So here I will write it as 0.45. And students, that is same for every period. That means this is based on the each unit, how much the value of the asset will decrease. It means while producing of 1 unit, the value of the asset will decrease by 0.45 USD, right? This is what we have, the depreciation per unit. So now we are going to calculate the depreciation expenses. As the students, we have discussed about it before. Depreciation expenses is equal to units produced in the period multiplied by depreciation per unit. Units produced multiplied by depreciation per unit. So here 30,000 multiplied by 0.45, that already we have calculated. That's equal to 13,500. That's equal to 13,500. So here I will write it as 13,500. This is the total depreciation expenses. And as you all know about it, the depreciation, accumulated depreciation, that is the summation of depreciation, or that is the total depreciation as well. So obviously that's also equal to 13,500. Now students, we are going to calculate the book value. Book value, as you all know about it, that asset cost minus depreciation expenses, that you will get the book value. And asset cost plus the depreciation expense, and when we add the depreciation expenses, you will get the accumulated depreciation. And from the book value, if we deduct the depreciation expenses, you will get the book value. So how much is the asset cost? That's already given in the question. Let's see that how much is the asset cost. Asset cost is equal to 50,000. So here I will write it as 50,000. So I will write it as here the asset cost is 50,000. Asset cost is 50,000 minus depreciation expenses. How much is depreciation expenses? That's equal to 13,500. 13,500. So 50,000 minus 13,500. Please, I'm requesting you that you should have your calculator with yourself. 50,000 minus 13,500. That's equal to 36,500. That's equal to 36,500. So students, 36,500 means that this is the estimated, this is the value of the asset after 1 year. It means the value of the asset has decreased by 13,500, and 13,500 minus 50,000, so that's equal to 36,500. So let's move to the second year. In the second year, the total units which are produced, that's equal to 20,000, and depreciation per unit is equal to 0.45 USD. This 20,000 is given in the question, and depreciation per unit we have calculated. Now students, 20,000 multiplied by 0.45, 20,000 multiplied by 0.45, that's equal to how much? That's equal to 9,000. That's equal to 9,000. That's equal to 9,000. So here I will write it as 9,000. 9,000 is the total depreciation expenses. And accumulated depreciation is equal to 13,500. That's equal to 13,500 plus 9,000. As you all know, as I told you before, that when we are adding the depreciation, we will get the accumulated depreciation, and when we deduct it, we will get the book value for it. So 13,500 plus 9,000. 13,500 plus 9,000. I hope you have your calculator with yourself. That's equal to how much? That's equal to 22,500. That's equal to 22,500. 22,500. This is the total. This is the total depreciation expenses, or by this much the value of the asset has decreased. Moving to the book value. So the calculation for the book value, as you all know it, that 36,500. This is the value of the asset. It was last year minus depreciation expenses for the current year, which that's 9,000. 36,500 minus 9,000. That's equal to how much? 36,500 minus 9,000. That's equal to 27,500. That's equal to 27,500. 27,500. This is the total depreciation. This is the book value, or this will be the value of the asset after 2 years. Moving to the next year. In the third year, students, the units produced that's equal to 40,000. The units produced that's equal to 40,000. In the third year, the total units which are produced that's equal to 40,000, and depreciation per unit is equal to 0.45, right? For calculation of depreciation expenses, we have to multiply 40,000 by 0.45, which 40,000 multiplied by 0.45, that's equal to how much? That's equal to 18,000. That's equal to 18,000. So here I will write it as 18,000. 18,000 is the total depreciation expenses. Accumulated depreciation, we have to add it 22,500 plus 18,000 plus 18,000. 22,500 plus 18,000, which that's equal to how much? 22,500 plus 18,000, that's equal to 40,000. that's equal to 40,000. So here I will write it as the summation of it, which that's equal to 40,000. 40,500. That's equal to 40,500. 40,500. This is the total depreciation expenses, or this is called the accumulated depreciation as well. Coming to the book value was before 27,500. 27,500 minus this year's depreciation expenses, which that's equal to 18,000. That's equal to 18,000. 27,500 minus 18,000. 27,500 minus 18,000. That's equal to how much? That's equal to, please minus it. 27,500 minus 18,000. That's equal to 9,500. That's equal to 9,500. It means the value of the asset after the third year will be equal to 9,500 USD. Coming to the last year, in the fourth year, depreciation expenses, how calculated? Units produced in the last year is equal to 10,000. Depreciation per unit is equal to 0.45. And how much is depreciation expenses? I have to multiply it. 10,000 multiplied by 0.45, that's equal to 4,500. That's equal to 4,500. That's equal to 4,500. It means 4,500. This is the total depreciation expenses for the last year. Coming to the accumulated depreciation. Accumulated depreciation, we have to add it. 40,500 plus 4,500. 40,500 plus 4,500, that's equal to how much? That's equal to 45,000. That's equal to 45,000. 45,000. So students, 45,000, this is the total accumulated depreciation. And coming to the book value, which before it was 9,500, we have to deduct it. From it, the depreciation expenses, which that's equal to 4,500. 9,500 minus 4,500, that's equal to how much? That's equal to 5,000, which this 5,000 is the last book value, or the remaining value for the asset. So students, this is the depreciation chart or depreciation schedule. And for just cross-checking that either our answer is correct or not, so we can go for it. So the first thing that we can add all of the units produced, that whatever our expectation was, whatever our estimation was, that this number of units will be produced, either these are produced or not. So 30,000 plus 20,000, that's equal to 50,000. 50,000 plus 40,000, that's equal to 90,000. 90,000 plus 10,000, that's equal to 100,000. That's equal to 100,000. So students, 100,000, this is the total units which are produced. It means our answer is correct. Depreciation expenses, if you add them all together, 13,500 plus 9,000 plus 18,000 plus 4,500, you will get 45,000. You will get 45,000, which this 45,000 is matching with the accumulated depreciation. It means the total depreciation expenses is equal to 45,000. This 45,000 is called the depreciable base as well. It's called depreciable base or depreciation cost as well. So this is matching with this. And the 5,000, this is the book value. And book value should match with the salvage value, and it should match with the scrap value. And the question, students, it was given that the salvage value is equal to 5,000. Salvage value is equal to 5,000. So here the book value is matching with the 5,000. It means our answer is correct. So students, that's all about the units of production method. I hope the concept is clear. I hope now it's clear to you that what is the units of production method, when the units of production method is used, and how to calculate the depreciation expenses with this method, and how to prepare the depreciation chart with the units of production method. And thank you so much for watching the video. For the latest videos, please subscribe the YouTube channel, and please on the notification bell. Thank you so much. خداحافظ.